All right, recording is on, so we'll go ahead and get started. I'm going to, maybe just for the sake of completeness, go ahead and start by doing an example of the first few questions with the deductions, even though I know that's not where most people are really getting stuck. But you know, we'll start there briefly, and then we'll move on to the harder problems. So what we want to do is make sure that we're being careful about whether or not we take the standard deduction or itemized deductions, okay? And the rule is you either get the standard deduction or the itemized deductions, not both, and you get whichever one is bigger, okay? So you take the larger of the standard deduction or the itemized deductions. Okay, not both. Okay, so here, if I look at the itemized deductions, I have 3 of them, so I'm going to add them up. $4,700 plus $3,900 plus $5,200. Okay, and our itemized deductions add up to $13,800. Okay, since this is an individual, the standard deduction is $12,400. The itemized deductions are bigger, so the amount of deduction that we want here is going to be $13,800. Okay. Okay. If instead, right, if I reload this question and I get a different number, okay, okay, and using these new set of numbers, I have 11,300. Now that's smaller than the standard deduction. So instead of using the itemized deductions, I would use the standard deduction. Okay, so my amount of deduction would be the amount of the standard deduction, 12,400. Okay. So the amount of deduction will never be less than the standard deduction. If your itemized are more, you use those and they'll be higher. And if not, then use the standard deduction. Okay. And then also just, you know, pay attention, and if it's a married couple, right, then you have a different number for the standard deduction. Okay, any questions about deductions? All right, so then what I think we'll do is we'll go on and we'll look at the process of actually filing taxes. So we're going to start, the way that these are ordered, I think, is in somewhat an increase in complexity, although they're all very similar to one another. Okay. So we'll start with this first one. Jacob is a 26-year-old full-time college student sharing rent with a roommate who's filing separately from Jacob. Okay, the roommate has nothing to do with this problem, right? There's just extra information. Jacob made $13,400 at his part-time job in 2020. He doesn't have any adjustments or itemized deductions. So first, find Jacob's taxable income. So what I think might help before we jump into computing stuff is just to give you kind of an outline of the process, and then we're going to follow that outline. And the outline that I'm going to use is the outline that we had from the notes. Okay, so when we want to compute the income tax, we start with the gross income. Okay, that's all the money that the person made. Then we calculate adjusted gross income. That's the gross income minus the adjustments. And we calculate the taxable income, where we further subtract the deductions. So we first figure out, do we use the itemized deductions or standard deduction? Okay, and then we take that away. So we first subtract off adjustments, then we subtract off deductions. That's the taxable income. Then we take that taxable income and we go to the tax tables and compute stuff. And that's I think the trickiest part. And then after that, we subtract off the credits. Okay. And then we'll talk about refunds or owing money also. But that kind of gives us a general outline. Okay. So in this first step, since he does not have any adjustments or itemized deductions, okay, the gross income is the same as the adjusted gross income. Okay. So our gross income is 13,400. The adjusted gross income is also 13,400. There are no adjustments to take off. Okay. Since he has no deductions, we're going to use the standard deduction. Okay. So the taxable income is going to be the adjusted gross income, 13,400, and then we subtract off the standard deduction, 12,400. Okay, so in this case, we end up with $1,000 of taxable income. Okay. All right, now we want to compute the taxes. So it's letting us know Jacob qualifies for an earned income tax credit, so he's going to get a tax credit. And then we want to compute how much tax he owes. Okay, the credit we apply after we compute the taxes. So first we're gonna do the taxes, and if I look at his taxable income, $1,000, that falls in this 10% tax bracket. Right, for an individual up to $9,875 of taxable income is in that 10% bracket. It doesn't matter that his gross income was higher, you're only taxed on your taxable income. Okay, so all $1,000 is taxed at 10%. So our computed tax is 10% of 1,000, which is $100. Okay, but we have to be careful. The actual tax that we owe, we take our computed tax and we subtract off the credits. So we're going to take our $100 and we're going to subtract off $185.13. So we end up with negative $85.13. Okay, which means that in this example, Jacob doesn't owe the government money, the government owes him money. Okay. All right, so the taxes that he's supposed to pay for the year are negative $85.13. Okay, Jacob's W-2 said he paid $335 in taxes. He was not supposed to pay any taxes, and he paid $335. So the government needs to give him back his $335 and also give him the $85.13 that he's getting from his credit. Okay, so he's going to get a refund of $335 plus $85.13. Okay, which comes out to $420.13. All right. Any questions on that one? Okay, so I said that these were roughly in order of increasing complexity. So maybe now let's go to the last one, where I don't know, maybe the most complicated questions are asked. Okay, and then we'll address any other difficulties that there might be between the problems. All right. The Hightowers are a married couple with 2 children filing jointly. They have a combined income of $156,000. So this is the gross income. Okay. They have $7,800 in adjustments. So the adjusted gross income, AGI, is going to be the gross income minus adjustments. Okay. It's over here, which is 156,000 minus 7,800. Okay, so we get $148,200. Okay, for our adjusted gross income. Okay, next we talk about the deductions. We need to figure out if they're going to use the standard deduction or the itemized deductions. Because they're filing jointly as a married couple, our standard deduction is $24,800. Okay, so we add up the itemized deductions. So we have 8,750 plus 7,500 plus 3,250. That gives us 19,500. Okay. That's lower, so we're going to use the standard deduction. Okay, so we use the standard deduction, and that means that our taxable income is going to be our adjusted gross income minus our deductions. So we take $148,200 and we subtract out $24,800. Okay, so we get $123,400. Okay. All right. Now we're going to compute the tax owed and apply a child tax credit at the end. Okay, so let's go to computing the taxes. When I look at their taxable income, $123,400, they're a married couple filing jointly. Okay, so that falls into this range here in the 22% tax bracket. Remember, though, that not all of their money is taxed at that same amount. For everybody, your first few dollars are taxed at 10%. And once you hit that threshold, then your dollars are taxed, the dollars beyond that are taxed at 12%, and then the dollars beyond that are taxed at 22%. Okay, so it's not one percentage that your money is taxed at. So the way that I like to think about this is think about these as buckets full of cash. And you dump your income into the first bucket until it's full. It holds up to $19,750. Okay. Then we dump the money into the next bucket until it's either full or we run out. But we're going to fill up this one too. To see how much it holds, it goes up to $80,250, but it doesn't start at 0. So we have to subtract to see how much it holds. So I subtract 80,250 and 19,750. Okay, and I get 60,500. Okay. So this is how much is in the first one. This is how much is in the second one. And then I can't fill up the third bucket, so I'm just going to use my remaining money. So I'm not going to subtract the 171,000 from 80. That tells me how much this thing holds, but I don't have enough money to go up to 171,000. I just want to see how much I have left to dump into this bucket. So what we're going to do is we're going to say our taxable income, we're going to take away how much money has already been accounted for. And we've already accounted for $80,250. So I take my taxable income and I subtract the $80,250. Okay, so we get $43,150. Okay, and as a double check, what I can do is say, all right, I'm going to look at how much money, make this bigger. I can look at how much money is in each of these three buckets. And when I add those up, they should add up to be the same as my taxable income. Okay, so if you add up 19,750 plus 60,500 plus 43,150, right? You get 123,400. Okay. Now I'm not going to write that down because we're not using that for anything. That's just a double check to make sure that you didn't lose a number somewhere. Okay. So now when we go to compute our tax, what we're going to do is take the percentage of the amount in each of these buckets. So in the 10% bucket, I take 10% of 19,750. Okay, and I get 1,975. And then we take 12% of 60,500. We get $7,260. Okay. Then we take 22% of 43,150. And I get $9,493. Okay, so our computed tax, okay, I add these three up. Okay, so we get $18,728. Okay, and then the actual amount of tax that we owe, we have to subtract off our credits. Okay, so there's a $2,000 tax credit per child, and there's 2 children. Okay, so our credits is $4,000. So our tax owed is $18,728 minus $4,000. So we get $14,728. Okay. Any questions so far? That part there, I think, is the trickiest part. That's where most people get hung up. Okay, I gotta scroll down to get to the rest of the problem. All right, the W-2 says that they paid $18,252 in taxes. Okay, so they paid $18,000. They only owe $14,000. That means they're getting a refund, and they get a refund of the difference. So I take the 18,252 minus 14,728. Okay, get $3,524. Okay, so again, one of the things that I want you to notice is, when you get a refund in an example like this, it's not that the government is paying them money. The government is just giving them back because they overpaid, right? So like if you go to the store and you buy a pack of gum for $1, and you give them a $10 bill, and they give you $9 back. It's not that they're paying you $9, it's that you overpaid, so they're giving you your change, and that happens right away. With taxes, it doesn't happen right away, it happens at the end of the year. Okay, so they're just giving you back your change, like, oh, okay, you paid too much, here's your change back. Okay. All right, this last one can be confusing. The Hightower's taxable income fell into the 22% marginal tax bracket, right? We saw that, right? Their taxes went into the 22. What percent of their gross household income did they pay in taxes? So the way to get through a question like this is to see if you can translate it back into into a math equation like we did at the very beginning of the chapter, right? When we were working on percents, we said, okay, if I take a percent of this thing and it is this number, right, I can turn that into a math equation, okay, by turning the words into symbols. Okay, so I'm going to write out the sentence. Okay, so what percent? And it says of their gross household income, but I know what their gross household income is, right? It's 156,000. So I'm going to say what percent of 156,000? Okay. All right. Did they pay in taxes? Well, I know how much money they paid in taxes, right? They paid $14,728. So what percent of 156,000 is 14,728? And the way that I turn this into a math equation, I know, what is my variable? Percent of means multiply. And then, so we're taking a percent of 156,000 is means equals, and then we have 14,728. So to solve for x, I'm going to divide. So I have 14,728 divided by 156,000. Okay. And I think that if you take this like one step at a time and you take the time to actually, write it out as a sentence and then translate the sentence into a math equation and then solve it, okay, that's not the fastest way to do a problem, but it's a good way to keep the numbers straight and not make a mistake. And in math, and actually also in accounting, that's probably the better thing. It's probably better to be accurate than fast. Okay, so if I turn this into a percentage, I'm going to get 9.4%. Okay, when I move the decimal over twice. Okay, so they're in this family is in the 22% tax bracket, but they're really paying 9.4% of their income in taxes. All right. Any questions on this? Okay, this question that we had here at the end, everything's marked right. Okay. There's another one like it. Let's see. Go back a couple spaces. One of your homework examples has two of those. What percent of the taxable income did she owe, and what percent of her gross household income did she owe in taxes? Okay, so this is asking that question that we did twice, once using the taxable income and once using the gross household income. Okay, so it's sort of two different questions, right? So you're in the 12% tax bracket, but how much are you actually paying? What percent? Okay, and then what percent of that is, that of all of your money? Okay. Right. So, again, here, when it says what percent of your gross household income, you're going to use the gross income. And here, you're going to use the taxable income. Okay. But those are numbers that you've already computed above. So, you're just finding the number and plugging it into the right spot. Okay. Now is a good time to ask questions. Are there any questions over income tax, the income tax questions? homework.
So for that bottom question, though, what percent of her gross household income did she owe in taxes? We just replace that $156,000 with just the shoot. What do we use for that one?
Yeah, okay, so this one is different numbers. So let me do this two different ways. Let me show you the what we're going to plug in where part of it. Okay, so oops. For this one, it says what percentage of her taxable income. So X times taxable income equals, did she owe in taxes, equals the tax owed. Okay, so your answer to that one is going to be the tax that we computed, including credits, okay, divided by taxable income. Okay, and then the one underneath it says what percent of her gross household income. So for this one, what percent, right? And then of our gross income, is equal to the taxes owed. So it's kind of the same deal, but we use a different number. We're going to use the gross income for this one instead of the taxable income. Okay. And, the taxable income, you find, right, in this part. The gross income is given at the beginning, right? So we have to scroll up a little bit, but, this Sherry's married has a combined income of $77,000. So, and for that example, that would be her gross income.
Okay, thank you.
Any other questions? Okay, any other homework questions off of either, sections 7 or 8? Credit card, sales tax. Yeah, question 6 real quick. Oh, okay, yeah, that's the one we're looking at here. All right. Sherry's married and has a combined income of $70,000, so that's the gross income. She has one child with a health condition. She can claim the following deductions: $4,500 in property tax, $6,000 in mortgage interest, $1,750 in charitable contributions, and $13,000 in qualifying medical expenses. So her itemized deductions okay, if I add those four things up, 4,500, 6,000, 1,750, and 13,000, okay, I get 25,250. Okay. Since she is married, we use the standard deduction for being married, 24,800. Okay, but this is more than that. So we're going to use the itemized deductions because it's more than 24,800. Okay. There's no mention of adjustments. Okay. So we're just going to say, all right, 0 adjustments. So the taxable income is going to be the gross income minus adjustments, which is 0. Okay, and then minus deductions. And you can subtract them all individually, but we already added them up and we know that it's 25,250. Okay, so we're going to take that 70,000 and then subtract off the 25,250. Okay, so we get 44,750. Okay, so that is her taxable income. Okay, so then we're going to go to the tax owed. We're going to go to the tax brackets here. Okay. For a married couple, the 10% holds up to 19,750, and that's full. The 12% goes up to 80,000, and we don't have that much. Okay, so what we're going to do is take the remainder of her money and put it in the 12,000. So 19,750 has already been accounted for out of her taxable income. So if I subtract, okay, I will get how much of her taxable income goes into that 12% bracket. Okay, so in this case, I have 19,750 in the 10% bracket, which is full, and the remaining 25,000 in the 12% bracket. And again, if you add those two up, they add up to her taxable income. So we've just taken the taxable and split it so that we fill up the 10 and put the remainder into the 12. Okay. So now we compute the tax. So we have 10% of 19,750 and 12% of 25,000. Okay, so 10% of 19,750 is 1,975, and 12% of 25,000 is 3,000. So when I add those up, I get 4,975. Okay. All right, and this one's a little bit sneaky because it's written up here, but it says that she can claim a $2,000 child tax credit, okay, for her one child. Okay, so our tax owed is going to be 4,975 minus 2,000, okay, because of the credit. Okay, so when I subtract off the credit, we'll have $2,975. So that's the amount of tax owed. Okay, it says that she paid $2,800 in taxes in 2020. She owes $2,975, so she didn't pay enough taxes, so she's going to have to pay extra. Okay, and the amount that she has to pay is the difference. Okay. So if we take the difference, 2,975 minus 2,800, we get $175. Okay, one of the things that hopefully you pick up as you go through this is that whether or not you get a refund really has a lot to do with how much money is withheld, right? If you only had $2,800 withheld in taxes, okay, you're probably not going to get a very big refund or none at all. You might have to pay. If instead, you know, she had $10,000 withheld, okay, more out of each paycheck each week, then she would have gotten a really big refund, because she would have been paying all that extra money out that she didn't need to pay. All right. Sherry's taxable income fell into the 12% marginal tax bracket. What actual percentage of Sherry's taxable income did she owe? All right, so that's the part where things can get tricky and confusing. Okay, so her taxable income was $44,750. Okay, so I have what percent X, right, times her taxable income, $44,750, is her tax owed. Well, her tax owed is $2,975. So X is $2,975 divided by $44,750. Okay, and I'm just going to turn that into a percentage, and I get 6.648%. Okay, and it says round to one decimal place, so you can just write 6.6%. It's always okay to give more decimal places, right? So, all right, and then the last one, what percent of her gross household income? We sort of do the same thing, except instead of using her taxable income, we use her gross income of 70,000. So X times 70,000 equals 2,975. So X is 2,975 divided by 70,000. Okay, and I get 4.25%. All right. Any questions on this one? So whether or not you have to pay or have a refund depends on which one is bigger, right? So you have your tax owed, and then you have how much you pay, okay? And if you paid too little, then you have to still pay more. If you paid too much, then you get a refund. Okay? It doesn't change anything down here. The stuff down here doesn't, it doesn't matter whether or not you got a refund or had to pay, because you're just looking at your tax owed and your taxable income, or your tax owed and your gross income. All right, any other questions? Okay, if not, then I think that we're done for today.